Hello investors and future investors, welcome back to the channel. For today's video, I'm going to show you how to trade even during a market crash or whenever we have these market pullbacks. Now, the market goes up, the market goes down, but none of this should affect you still being able to generate opportunities and also still being able to generate investment gains. Welcome to Investment Gains. Let's jump right into it. Welcome back investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. So for today's video, I'm going to show you what strategies I would be using in the event of a market crash or a market pullback. So you guys know how we do it. We're going to get down and dirty with options, meaning we're going to go through the strategies. I'm going to show you step by step how I go ahead and do these strategies in order for you to be able to follow along with us and also be able to practice this with your portfolio. Please remember, always do your own due diligence before investing. Now, to start off, so if the current market situation has made you sell your stocks in order for you to keep your head above water in this market, then you're not an investor, you're a trader. When you're an investor, you have a future outlook of where you want to be in the market, so you make preparations in case of anything like this happening. So today we're going to be using Micron Technologies, ticker MU. Okay, so here I am on Micron Technology, and like I just mentioned, as an investor, you need to see the future outlook of whatever stock or whatever investment you're going to get yourself involved in. So as of today, you can see that it's a bit up today, but we're going to go ahead and see how the stock has been performing in the general sense of things. So we're going to go over to the 1 week mark, and as you can see, it's down right here. If we move over to the 1 month mark, you're going to see it's down again. And one last one, we're going to go ahead to the 3 month mark. So the overall stock market is telling you that it wants to decline or it's going to trade sideways for a bit. Now, I'm going to go over to one of my favorite sites in order to get a general market overview, which is going to be finviz.com. So this is as of today. Now, as you can see, most of the market is trading green, but once again, you need to take a broader look, a macro look even at the entire market. So this here represents the 1-day performance. And if you were to go into the weekly performance, it's going to give you a general view. So here you go. As you can see, the overall market is in a downward spiral. Now, I always say to you, always take what the market give you and trade accordingly. If you do that, you're never going to lose and you're going to continue to make consistent income. So now we're going to go ahead back to Robinhood, and we see that the overall sentiment of the market is a downward cycle, or it's probably going to trade sideways for a couple of days until it decides whether it wants to break down lower or it wants to go back up. But that does not matter to us because what we focus on is making consistent income. So now we're going to go ahead, we're going to go to trade MU options in order to open up the option chain. Okay, so now the option chain is open, and what we're going to be doing in a down market, we're going to be selling even more puts than we sold before. We're just going to make a slight tweak in our strategy in order for us to continue to bring in that consistent income. So I'm going to go now to sell, and I'm going to go to put, and I'm going to go choose my strike date of December 27th. Now, because the market is in a decline, you're going to want to choose your strike price below the current share price, even more now than before. And what we're going to be looking for, we're going to be looking for a high chance of profitability. So I'm going to be going with the $82 strike price, and that's going to give me an 87 chance of profitability. And I'm going to settle for $35 premium. It's going to be $35 premium because the premium I'm going to receive is going to be 0.35, and as you well know, each option contract is multiplied by 100 shares. So the question is, why did I choose the $82 strike price and receive only $35 premium as opposed to choosing a higher strike price and getting even more premium? Well, like I said just a couple seconds ago, always trade according to what the market gives you. The market shows that it's in a current decline right now, or it's going to be trading sideways. No one knows if the market is going to go lower. So rule number 1 is to choose a good stock. Rule number 2 is to sell puts at an increased chance of profitability in order for you to increase your chance of winning the trade. And even if you do not win the trade, let's say you are assigned come expiration date, then you're now going to own 100 shares of a good stock at a much lower price. Now, that is pretty much it. You're going to be doing your sell and your puts, and you're going to be making consistent revenue. And every time the market goes down or continues to trade sideways, you're going to keep lowering your put prices. Like I said, no one knows where the bottom is going to be or if the stock market is going to rise again tomorrow. No one knows that. Now, here is a second option strategy that I'll encourage everyone to do. Now is going to be the best time to pick up leaps. Now, not right now. However, what you want to do is that you want to wait until there are clear signs that the market is going back up again, then to pick up leaps. So let's go ahead and do that. Let's go to buy, and we're going to go to call. And now we're going to go and choose our strike date for us. Hopefully you guys are familiar with leaps option and how they work. I will be going with the December 19th, 2025. And once again, I'm going to choose my strike price below the current share price. Now, I do have a couple leaps option on Micron Technologies at the $80 strike price. And I can tell you, I did not pay $21. I paid much more for it. So now that the market is in decline and I know my confidence is in Micron Technology, I know the stock inside out, I have zero issues picking up a leaps option at the 21.50 strike price, which is going to be probably about $800 less than what I paid for it about 4 weeks ago. So once again, another option strategy you can use now that the market is in a decline or is going to be trading sideways is going to be a leaps option. Do not pick up the leaps option right now. Please keep monitoring the market until you get clear signals that the market is in an uprise again, and then that's a perfect time for you to choose your leaps option. Now, this is where the majority of the wealth is transferred when these opportunities present themselves. Now, if you have any questions about these option strategies or how to implement them, or you want other strategies that's going to enable you to continuously keep making investment gains, well, like the channel, subscribe, and let me know in the comments below. And until the next market crash, keep pushing your investments.